What's up everybody, it's Dick from Traders Reborn. Quick disclaimer, this video is for educational purposes only. Nothing is financial advice. I'm not a licensed financial advisor. Decisions based on this information are at your own risk. I am not liable for any losses. Thank you for understanding.
We're just going to talk about how to set it up and how to use it, okay? This is our third time making this video because all the other mic problems and the mic problem and the screen problem. There is no script for this course. This is all pretty much, you know, freestyling. Okay. All right. So first off, what we're gonna do here is I'm gonna give you guys the settings. YouTube content FIB course right here. I'm gonna go ahead and open this up. So as you guys can see, this is the settings for the FIB. Okay. This is also in the education forum. The education forum, as you can see, this is all the settings right here for all the FIB levels, each one of them. If you guys want to have the same color as me, so when we're live trading, you guys need, I tell you guys the 38% is the purple line. You guys already know what it looks like on your screen. So that's what I would prefer you guys to do. I would prefer you guys to use the same color settings as me, so that when you're trading live, everything comes faster. You know, you don't have to look for your own levels. You don't have to look for your own color-coded levels. All right, so that's also in the education forum for the Fibonacci section. Yeah, I got that. Okay, so go ahead and save this picture however you guys want it. The way you guys would set it in NinjaTrader here. Draw you guys here, and just draw one random one here. Here's the setting for NinjaTrader. You go to you go down here, and you would go down here to levels. Make sure you open up that drop down, and then you edit price levels. Okay. So what you don't need, you can remove 23%. You don't need that. You can remove 76%. You don't need that. What are you talking about? Oh crap. Okay, so once you guys get in here, 23% you do not need, okay? Remove the 23% right here. Remove the 76% right here. These are the only levels you guys need, okay, for the Fibonacci, okay? Sending it here. These are the only levels you need, okay? 38% and 61% are interchangeable. They're about the same levels. They, depending on the certain platforms, the way you guys use it, the way you guys draw it, some, like Thinkorswim, you draw from the top to the bottom. But in NinjaTrader, you draw from the bottom to the top. So certain platforms are you know, they're a little bit opposite. I think, I forgot what TradingView is, but, you know, just always make sure the 100% is facing towards the direction of the trend. Okay, the direction of the trend should always be where the 100% is. Okay, so the way you guys do the settings is obviously right here. You would go into 38%, drop down menu, change the color, opacity. I like 60% because I don't like it too bright. But 0% and 100% should be your dimmest gray color. Okay, as you can see, opacity is only 40% on these because I just want it to barely be visible. So I want it to be barely visible just so that I know where I drew my pivot points, so I can reference it when I look back. Okay, so, and then 161 and 261 is golden. Okay, I like to leave it gold, and I like to leave that as a dash, as you can see right here, just because those are your target levels. That's where you want to target. Okay, so yeah, any questions, you know, you can always ask. Yeah, what's up? Oh, okay. All right, so, and also guys, I also like to do templates. Okay, I'll talk about that template later, but I like to have one like higher time frame template and then one default template. The default template is this one that I just you guys are seeing right now. Okay, that's how it looks. And let me show you what the other template look like. Okay, so the other template here would look like this. This is a higher time frame template. Let me show you. What it's gonna be missing is, what I do is I save the template. I just remove everything and I put in a higher time template here. Oh shit, what the hell is... So as you guys can see, my higher time frame template doesn't have anything but the 50% and 38%, and it's also a bold dash color. That's how I'm gonna know when I'm trading where that where this Fibonacci came from. If it came from the higher time frame or if it's from the lower time frame. Okay, so that's just right there. All right, so now what we're gonna do is we are going to go into how to draw it. Okay, so what I like to do when I draw Fibonacci's is I like to draw from the higher time frame down to the lower time frame. Okay, so based on this right here, as you can see, this is going down, right? So because it's going down on the downtrend right here, you want to take from wick to wick. Okay, you find the most defined pivot points, and right now the most defined pivot points is right here and right here, right? Those are the two defined pivot points. So what you're gonna do, Control F is my hotkey. Control F. You see this? Line it up with the bottom wick here. You click it, and you're gonna drag it all the way up for that 0%, as you can see, to the top of the pivot point right here. You see 0%. Where it's heading down, so the 100% should always be where it's heading, right? So now what this tells you is, see how it gave us the target point also. So what this tells you is that if price bounces from here, look where, see how it's matching up with all these support right here too. If price matches up, if price bounces from here, the highest it should go is here. Okay, this is the 50%. If this goes past the 50%, we're now looking for a reversal. So hold on, I'll answer that question in a bit. So if price comes up, right, you're looking at price that it can potentially come up to here, 15548. That's the price, right? So once price comes up here, you're now looking for a reaction. Maybe something like this, like this. It's gonna do something like this, or it can go over here like this, and then come back down. Right now, price, what I like personally is I like the 38%. Okay, I like to use this purple line right here as my entry. A lot of times what happens is price, when it shoots up, you know, it's very easy for you to come here and then just shoot down. That's not how the market works. It likes to go past it a little bit, just so that if your stop loss is anywhere right here, you're stopped out. It likes to hunt for your stop losses. No, 128.7%. I never use it. I don't even know what it is. I posted the levels I use. That's the only levels I watch. Okay, so once price comes up above the 50% right here, what I usually watch for is it hitting this 38%. Okay, once it hits this 38%, if price reacts here, I have a lot more conviction at the 38% for it to reject. A lot of times it goes past the 50%, it wicks this purple line right here, and it shoots right back down. Shoots like this, and then like this. That's how price would go. A lot of time 50% does not hold up right away. It does. The price usually ends up below it eventually, but the wicks hit the 38%. So if you think about it here, if you had entered anywhere at 5548, you would have about 20 points move upwards still to knock you out. And then what you want to do is you want to use this purple line here to 38% as a stop loss also. So being that it's at 15669, what you want to do is your stop loss should be somewhere above that, right? So 669, you maybe about 70, maybe about 675, right? You give it a little leeway somewhere above there. It has to be behind that purple line. That's a good ideal stop loss. So a lot of times what you're going to see also is you're going to see it come through this also, but all wicks. Most of the time the body stays below this purple line. Oh, is it? I don't know. No, I only use 161 and 261. That's it. I don't use the other one. Yeah, that's yeah, I don't use that one. Yeah, 161 is where my profit target usually is. Okay, so that's mainly what Fibs is, guys. A retracement. That's why it's called Fibonacci retracement. It's to show you how far a stock can move and pull back before continuing into the same direction that you're that is going, right? So in this case, right, if you can look at here, the 161 is the target. right here. This is the target, you see? This is the second target. So over time, if you watch, let me match it up right here. Look, if you draw resistance and support, take a look at where it's at, guys. Look, if you were to draw resistance, support, look, matched up with that line. If you were to draw another support down here, check it out. Boom, right there. You see that? Lined up with the golden levels. Right? So you see, look, if you go back, take a look, it's still lining up. You see that? It's still lining up. Look at how well it lines up. You see? Look at it. You see, these are just price points and where it reacts. So right there, that's how you know that's a good level. You see? Now, so there's two ways of looking at this, right? So you see how right there, when we zoom up, the trend is going down, right? But overall, the trend is actually going up. So when you look at it this way, trend is actually up, right? So now what you're going to do is find the most defined pivot point. Where do you think that is? From the top, it's still the top right here, right? This is still the top. So now this is the bottom right here. This is the most defined pivot point, as you can see, right? You see how these could be it too, but look how defined this one is. We're gonna use that one. So now what you're gonna do is you're gonna take this top right here. Because price is moving up, we always start drawing from the that pivot point, from the direction that is moving, which is up. So we're gonna start our pivot point here. We're gonna do a Fibonacci, start it here. We're gonna drag it all the way down to and line up to the bottom pivot point here of the wick, and that's where we got it, right? And see, for the upside, we're not gonna see anything because there's no levels up there. But for the downside, let's delete this one now. Or even if you can also keep it. Here, let me just delete it. So now you're gonna look at how far price can retrace, right? So this is saying that on the 4-hour time frame here, price can still go all the way. So right now it's bullish, right? There's an uptrend. Look at this uptrend. Right? So it did break structure here. So right now what it's saying is that, like, technically price right now is still bullish. Even though on the shorter time frame it's going down. It's going down, right? But this is how far it can go down right here to that level. Now if price is down here and people start saying it's bearish, it's not bearish yet. It's bearish once it passes this level. Okay, that is when it's bearish. 13552. If price does not go below 13552, we're still on a bull market. Once it drops below this, then we're gonna see more downfall down to here, to the next level, right here. That's where you drew your first pivot point, you see, right here. And if you look at it here, 50%, it has a reaction right here, you see. Let me draw, let me go ahead and draw some supply and demand here. Usually what happens is it matches up with your supply and demand also. Supply and demand, support and resistance. See right here, there's one right here. See right here, you can draw one right here. You know, there's plenty that you can draw. There's one right here. There's one right here. There's one right here. See? It always matches up. That's how you know you have good levels. It should match up with other confluences so that you can have more conviction in these fibs. So you always want to mix your fibs with confluence. Okay, which means other levels, other support and resistance, and things like that. You always want to make it. You always want to combine it. You want three to four confluences before you take that trade. Confluences just means reasons, guys. If you guys have more than 3 or 4 reasons, that's what it is. You know, confluence is just, I don't know. It's just a fancy word, but that's just what it means. Okay, so we're now gonna go down to the lower time frames. Okay. Let's go to the lower time frame and check these fibs out. Delete these. Here, look, you can also draw like this. See? Look where it's bouncing, guys. See that? From the top, I drew it down here. And look how well it's reacting. You know, these are just levels where it's gonna react. And if you look at it here, this doesn't look like much because we're on a 4-hour time frame, but it's actually reacted. You see? Look. So now we're gonna just make this into a daily fib here. Hopefully it doesn't go crazy. Yes, it did. Okay. Okay, so now we're gonna go down to the, usually what you want to do is 15 minutes, 30 minutes, 1 hour. Those are all good fibs, guys. Okay, but once you bring it down to 5 minute, that's where I trade. I trade in the 5 minute zone. This is how you need to know which levels are belong to the higher time frame. So like, let's say, just say for a reason, for example, this right here. Yeah, so normally I would have the fib on the higher time frame set to my my higher time frame fib template, and this would be dash, and this would be bold dash. But so right now Ninja Trader is acting up, so I can't do it. But let's use these levels right here. On the 5 minute, we would bring it from the bottom here to the top. These levels don't seem that great because they're not really current right now. Let me see here. Okay, we're gonna zoom up here on the 5 minute. So in this scenario, let's say we're trading in this scenario right now, trend is going down a little bit. What you're gonna do is you're gonna draw the bottom fib right here to the top of the pivot right here. It could be here or it could be here. So this is the thing about Fibonacci's. It all also depends on when what time frame you draw it at. But as you can see here, we started this fib right here at the low of day, and we brought it up to the high of day in the same session, and we're able to get some reaction. See, so right now, if we were to draw based off of this chart right here, let's just say this is the current chart, right? Goes down, it starts pivoting upward, it pivots up. This is when you would draw this Fibonacci right now. You would draw like this, down, pull it up to the top, highest wick right here, right? Highest wick of the day, pre-market, which is right around here. Now, this is how the chart looks as it's moving. You see, what you're gonna do is you're gonna try to see how far it can move up before it goes back down, right? So we're looking at around 115 to maybe 133, and let's take a look. So there it is right there, reacting to the 50% fib right here. See, it's going back down already. It's going back down, and then here it goes, come back up. It's coming back up, right? And look where it is. Does it pass it? It doesn't pass that 38%. You see, that's the reason why I like the 38%, guys. You see that 38% held up, 50% did not. So if you were to trade 50%, you could only catch this move. But then as price goes back up, once you see it holding below that 38%, you would short it. So that's how you kind of trade that. You can see it right here. Let's just say if we were to be right here in this case scenario right here as we speak, right? When price is shooting up right here, shooting up. Here, let's make it a little bigger. Let's say price is coming up, right? I'm waiting for that 38% for it to react. I'm waiting for it to come to the 38%. Once price comes up, look at that huge rejection, right? Huge rejection. And then look, as it's coming up, huge rejection, I'm just gonna see what it does. What I like to do is I like to look for the second test of that level. And look, it came back up. Tried to test it again, right? Tried to test it again, but look at the volume. It's lower than the previous one. There's no action on this volume candle. And as it goes up, look at the volume, guys. Look at the volume. It's dropping down as it's moving up. Volume divergence, right? Price moving up, volume falling down. And look, as it's coming up, this is where I would actually take a short right now, right? Seeing that the volume is dying out as it's pushing up, I would take a starter position right now. And my stop loss will be somewhere, let's say right now 133. My stop loss, my hard stop, would be somewhere around, right around about probably above this candle here, because this is the next level of resistance. So I'll probably, my hard stop would be around right here, somewhere around 52 or so. My mental stop though would be above 135, because 133 is right here. I like to round the numbers up to an even number, or just a more a solid number. So because 133 is a 38% right here, I would let the price close above 135. If price closed above 135, I would manually close my trade. But the reason why I leave my hard stop up here is because in case of any wicks, okay, that's what it is. I don't want to get wicked out. I don't want to be used as liquidity. So this is what's going to happen. It's going to do it like this. Price action is going to jump back and forth, But look, none of these candles have closed above the 135, right? Look at the purple line. See, price never closed above. You see that? And you see how the volume just keeps dying down, right? And look, the first sign of a lot of volume, increase in volume, was the red candles when sellers stepped in. And here we go, sellers. You see, and then now it's failing to make a higher high. You see, this would be a good short. That would be a successful short. We would have caught that at from 33 down to 0.85, guys. That is 50 points, about 50 points. That's what, 200 ticks that we would have caught on this move alone right here. That move alone was 200 ticks. And look at where we would have collected. You see, right here where the next level is, where that red line is. That's a 50 SMA. I don't trade on 50 SMA. I don't have that usually on the chart, but this is a different template for my charts. I wanted a clean chart for you guys. So you would have, trimmed major there, depending on how my levels were at the time. I normally would have levels, but this chart doesn't have any levels. But that's just to show you how you would trade this 38%, right? On my other video, I have a perfect example, because while I was doing the course, it was live during before London session, and we were making the predictions, we drew our lines, and everything played out. Pretty much we said we're gonna wait for this to happen. While I was teaching, price did come to 38%, and when price came up to 38%, we executed, and we hit it like 100 ticks, 150 ticks during London session on that trade. I think Plot, you witnessed that one on the last course, right? Yeah, I don't know if he's here, but oh no, he's not here. That's fine. But yeah, so I'll show you guys the video of the previous one here, the previous that happened. But let's see. So in this scenario here, we can actually draw this FIB also, right? As it's moving up, we want to know how far it can drop before it can continue moving up on this uptrend over here, right? So you would take from this pivot to the bottom of this pivot. These are smaller time frame fibs, so they act kind of like supply and demand. Once it passes it, it's no longer valid. So you're gonna take the drawing from this top fib right here down to the bottom here. So what you're gonna do is, this is how price is at currently when you draw it, okay? So what you're gonna do now is, when price goes down, how far can price go down before it can move back up, right? And look, 50% reacted, right? And it's also in line with the 50 SMA. Now let's see. But remember, I like 38%. I don't make a trade until it hits the 38%. I like to see it wick the 38%, and that's when I take the entry. And look, let's see if it comes down to 38%. Very close. You see, it did come down pretty close to it. But so the strategy behind this right here, in this case right here, if you were bullish, right? So this right here is if we're bearish, right? But now if we're bullish, we would be looking for this kind of move. Once it comes down here, it passes this. If price comes down here like this, I would like to see it bounce upwards, right? And maybe test it a couple times here. That would be great. But a lot of times when it hits that 38%, it's very aggressive. It hits it about once and then it just it just bounces. So ideally, what I wanted to do in this case scenario is price going down, and then the moment it reclaims 50%, right? When it comes back through 50%, that's my entry, somewhere around right there. Pretty much right when it passes this 58% coming back upwards, I would take it. I would enter. So if I was to enter here around 90, my exit would be around VWAP, which is around 112. So that's about 100 ticks. That's 30 points. So you see, my exit would be somewhere right here. And look where the exit is. That's a pretty good exit, because after that it started dropping. Right? So this is where you would pretty much aim. So right there, that's another 100 ticks that you would take on that trade. And then let me show you my Fibonacci settings for the higher time frame. So if you wanted to do the setting for the higher time frame here, here's the template for it. Guys, I do have these in the education section also for the Fibonacci. I have my templates and I have my drawing templates and all that too. So you see how this is how the drawing is right here, how it looks if we were to be trading. See these lines here, these bold, thick purple and blue lines? This is how I know these belong to the higher time frames. Do I use the higher time frame pre-market? You always use the higher time frame. High time frames are going to be more accurate than your lower time frames. Look. I'm gonna show you guys. Look, guys. Here's another thing. Okay, I love to use Fibonacci's when there's no levels. If you don't know your levels, right? If you, let's say you just hopped on the chart, you have no idea where your levels are, right? The best way to get levels right away, instantly, without drawing anything, right, is drawing a Fibonacci. Let's just say I just barely hopped into this chart. Look, I'm just gonna draw right now from the highest point. Let's say that this is where the current price is. Okay, I'm just gonna draw right here, right here. Look, now I know where the price is gonna retrace back to and pull back to, and where I'm gonna target. You see, price came out here. You see, this is where you would take your longs. You would take longs here. You would take longs here. Right, that's the level right there. That's how you would kind of get fast levels, and this would be your target, kind of those golden levels. You see, this is why I wanted a blank chart, because my chart I have not updated it. It's very dirty right now. Let me bring you guys to the opening. Okay, I love to use Fibonacci's during the open. What do you want to do? This is how you do it. You want to go to the 15-minute time frame, right? Usually what you want to do is 15-minute time frame. Okay, when the market's about to open, you want to take the highest and the lowest of the pre-market level, and you would draw a Fibonacci. So this is when the market opened right around right here, right? So pre-market would be here. Let me delete this. Look, so this is pre-market level. I'm just gonna delete a bunch of levels right now. We don't need them. I'll draw it again later. Okay. So looking at this right here, this is pre-market right around this candle. So when price was right here, this would be the lowest, right? Before market even opened, I will draw this fib. Since it's going down, I'll draw from the bottom to the top. Pre-market is right around here. And then take a look at the fib, guys. So we're here. This is where we open, okay? We open around right here. This is where we open. This is just to show you how we would trade this if we were in a live market. 15-minute, all right? Let's go down to the 5-minute now. 6:30. Take a look. This is where market opened right here, right? From this fib. Take a look how much it went back up. Look at it. Right there, 50%. You see? Let's just say I don't even have this level here. This is all I have. It hit right there on the 50% and it closed below 50%. You see that? Look at these levels. This is us not even knowing anything. Let's say we have a blank chart. Come in, draw a fib. You're gonna know where it's gonna reject. You're gonna know where it's coming back to. And if let's just say you're a VWAP trader, right? Yes, yeah. You see how this supply right here? This is supposed to be red. This supply right here, it's more confluence. It's just added confluence to that area, right? And if you're, let's just say for example, you are a VWAP trader. This is VWAP. It shot right through VWAP, you see? But what was more accurate? the Fibonacci was more accurate. See, this is what price looks like when it's open. But then the reason why I took this level right here is because I'm trying to base it off of, let's just say, if market didn't even open yet, where would you draw your fib? This is where the price opened right here. Market opens here, but during this time, market hasn't opened yet. This is all we have. This is the only levels we have. So we're gonna draw it from here back to the London session here, right around here. See the high? So that's where we drew it, from there to there, and this is how we got that level. So that's the reason why you drew it on the 1 hour fib. We're not doing that right now. We're giving a scenario of how to draw it right at market open, right before market open. How do we get a Fibonacci right away so that we know what to trade when the market opens? Right now it's 5 minutes. So that's why I said use the 15 minutes when you are doing a pre-market level like this. This is 15 minute right here. 15 minute, you're gonna see it more clearly. You see, I drew it from here up here, and then now we go down to the 5 minute. This is what we would be looking at right here. Let's just, like right here, market's open right here, right? Look, as price goes down, we don't know this level, because right now we would have to see how it reacted right there. That's my demand that I had. But what I'm looking at here is how far can price go up, right? So if I was to hit my demand here and I see it holding here, I would take a long. But how long do I go? How far do I go up, right? What's my TP? My TP would be here, where the 50% is. You see? And look where it hit, 50%. That would have been a huge move, guys. From 60 all the way up to 160. That's a 170 point move. Okay, that's huge. You know, obviously, if you were to take that trade, if you're in that trade, you would trim right at VWAP, right? You trim half of your position at VWAP, and then you would take the rest to the 50% to 38%. You would trim some more here, and probably leave maybe one runner up to this point. You would leave very few runners running up here just to maximize the trade, which it never happened, right? So once if price was to fall back down, you would close out everything, and that's a successful trade. That's how you take that trade, right? So look, you see that huge rejection from there. So now let's give another example, right? Let's give another example of so back to what I was saying was pre-market level, guys. This is how you trade morning open. The best strategy that I found for trading morning bell open. And as you can see, that's when price is very volatile, and it likes to just wick these levels. So this is how I always trade morning bell open, guys, and I get those bangers because of these levels, the Fibonacci. And a lot of you guys, you guys think it's very volatile. You guys don't know what it's gonna do, because it's true. There's a lot of volatility, so you need to have a lot of conviction in your trades. So let's go to the next day, okay? Let's go to the next, the previous day after that, and I'm just gonna show you guys. Here we go. We're gonna go to the next day here. Here we go, the next day. Let's find a level here and let's see how it reacts. Okay. So let's just say market opens right here, right? Around 6:30. So what you're gonna do is you're gonna get the levels from 6:30. So market didn't open yet. It's gonna be somewhere like right here, right? So it kind of looks like it's going up. Right here. So price is going up. So you see how it's kind of ascending? So the trend at the time was upwards, okay? So based off of that and these wicks right here at 6:30, what you're gonna do is you're gonna draw the top wick right here to the bottom of the bottom wick. You see that? It's a very small movement, but that's how you're gonna do it. And look at the price, guys. You see how price goes up, down, up, down? 6:30 opens around right here. This is 6:30. Right here, 6:30. Okay, we're gonna maximize these candles, and take a look at where it's reacting, guys. Price drop down, 38% right here, right? Look at the wick. There's only wicks. There's no body. You see that? Once the price drops down, I'm not taking it yet. Okay, I'm not taking no trade. I wait until the price comes and crosses above the purple line, 38%. I will take my entry right here, my start position. The moment it shoots past 50%, the baby blue line, I'll add my full position, and then I'll take it to the next level. And this will be my first target right here because I have a level here. That will be my half trim position and my full trim position. Look, before it dropped down. You see? That trade would have been a successful trade at the open also. So as you can see, right there, right? This right now is obviously in hindsight, but this is how I would trade it, and I'll show you guys live right now in the other video when we were doing the other course. We were trading with members live right after we taught them. An opportunity came up, and we took the trade. But you guys see this, right? Wicks right here. You see, wicks is what gets you. And if you were to enter, let's just say right here around 92, even 300, your first TP was at 60 points out, guys. 60 points, man. That's a lot. That's like what, 200 ticks or more? It's over 200 ticks. And then we would hold the rest of the runner all the way up here. Look at that. Huge amount right there. You would have caught this whole move. And you know, if you guys have traded with me in the trade live sessions, I hold it. I will get those 300, 400 ticks. So right there, you guys see two examples of the opening and how you guys would trade it. And then you guys see me on the live. This is how I trade my open plays. You know, I always tell you guys wait for the 38%, and this is what I mean, the 38%. And then I tell you guys, you know, just wait until it crosses. If it comes back down like this, we don't take the trade. Okay? If it just keeps dropping, doesn't matter. Our plan is once it recovers this purple line here above it, we take our first entry, comes up again, take our second entry, and now we hold it to the next play, to the next level. And then after that, obviously, we would try to pass this level. Once it passes through 15363 here, my stop loss would have been the mental 5-minute candle close below 60. Right? So pretty much, if candle closes below this this orange line here, then I would exit my trade. Otherwise, I would hold it to my next target, which is up here. And a lot of people have problems holding these trades, just because, you know, it's hard. It's hard. They see green, they want to take green. But you have to have the conviction, right? This is how you have conviction, guys. When you have levels, when you're prepared, when you have a plan. When there's a plan, you're not scared to take it, right? You guys know how I trade. If I lose, I lose, you know, it's fine. But I follow my plan. Price drops down here. Once price reclaims 38%, entry. Price come up here. Another addition. Full. That's my full position right here. Take it up. Trim. Take it up again. Full position out. Done. Right? Let's just say it didn't work out like that. And we got up to here only, right? Price closes below this line. Exit. If you exit here, you would have had this whole move still, guys. This whole move is still caught in profit because your entry is down here. See? So, you know, you just have to get over the idea of losing back profit. You're scared to lose back profit. A lot of times that's the reason why you guys cut, you know. But play with your analysis. If the analysis is good, you just play it. Right now, I'm going to show you guys the video of it in real life, real live action right after the course, when we just did the course, but the sound was messed up. So here's a video right here of the course Fibonacci before when I was doing it. You can see here. So what we did here was right here, I believe, right here. So I was telling everybody at this area we drew a Fibonacci. Let me fast forward it. We drew a Fibonacci right here just to show members. I was like, hey, I'm gonna draw you Fibonacci right here and show you that price is gonna come back down, where it can come back down, right? Told them this is where it's gonna come back down to 38% right here. Once price does come back down, we're gonna take a long to continue the trend going upwards, right? And we would target this level, and then we would target this level, and watch it play out. Okay, so you can see it right here. Price did go back to that 38%, and that's where you can see me circling it. I was talking, but my mic's not working, as you can see. I was just pointing things around, but nothing's working. This was from the previous course I did last week, but no sound. That's why I'm redoing it. So this is where I said, hey, look, the price came down to the 38% that we drew it from earlier, from here to here. See, this is where we draw it, from here down to there. So now price is dropping down. So now we're discussing about how we're gonna take this longs if it holds. You guys can see here at the time, it was like right before London, and sorry, this is where we took it, but I forgot to record right at the beginning when I executed it. So as you can see, we took that trade. Our average was right there, right when it passed VWAP, right? So in this case, I was using VWAP also as a confluence, right? So the VWAP plus the 38% was my confluence. That's how I had the conviction of the bounce. So once it reclaimed the VWAP above VWAP, that's when I took the entry. And you can see the wicks right here. As I was talking to you guys earlier about it, the wicks don't see, it only wicks through there. The body stays above that 38%. And as you can see here, I'm gonna fast forward a little faster here. Speed 1.5. So as you can see on the Discord, you can see right here on the chat, we're over here, you know, and announcing the trade because we're actually in it, we're playing it. So we did take it. And you can see right here, my strategy, stop loss closed below the 38% fib, 5-minute close, which is that 15225 right here. And target price 15244, which is right there on that trend line, which it could come up to retest, right? And then my TP2 was 15249, which is the high of day. And you can see, you watch this trade play out.
Order filled.
So here's the money coming up.
Order canceled.
I'm just moving around my bracket so you can hear the audio.
Order canceled.
My mic is not
Order
working.
filled.
And then as you can see, price just shot up. Look, most people would take right here, right? Most people see the TP, the green, and they're gonna try to take it. For me, I just trimmed one only. You see, because right here there is a trend line, so this could be a shot down, come back up.
At least you're live. That's on still.
You see, you can hear Pod talking.
Wait, Dick, are we doing London tonight?
Yeah, see, I'm responding, but you don't hear me.
For sure.
Yeah, so
It's a must.
in this scenario,
Order submitted.
price was going down, comes back up. So this is where it could retest, and if it holds this level, it would come back down. But the trend was going up, so we wanted to break here. So I held the trade. And let's fast forward it. As you can see here, it has a little fight here. It's trying to break up above the demand, come back down to retest the demand, and this is where I guess I drew another supply up there. And let's see how it goes moving forward here. Here we go. So there's a shot up. It's still riding that trend line. You see how it's kind of it needs to break that trend line. And here we go. Here we go, guys. There we go. So pretty much I just trimmed one more right there. As you can see, I moved my bracket down. I trimmed one more. My target now, I changed my runner all the way up to 15260 basically. Okay. Where did it go? So I think Okay, what happened here, I remember, was I believe one of my order got when I was moving the bracket around, as you can see my P&L right here. Some of it is I'm down on it. So somehow when I was moving around the bracket, it flipped my trade to shorts instead. So that's during that time there was some issues with Ninja, and I was messing with the settings. So you can see here some of my trades were green, some of my trades were red, because those trades got flipped to shorts instead when I was in longs. So I went ahead and just sold out and closed out my full position, and then I re-entered eventually, I believe. Or did I not? Okay, I did not. So pretty much that was the end of the trade. But yeah, so you can see right there, you know, the big bounce, right, up to 38%. We do this every single day, though. We use the same method every single day, guys. We don't do anything different. I use basically there's about 5 strategies that I use, 5 setups. If you guys watch my YouTube video, I have another video on YouTube in the channel that talks about my 5 strategy. I use that 5 strategy every single day. In this strategy alone, I use about 2 or 3 strategies off of those 5. If you can see here, when you make a trend line going up, it broke structure. Once it broke structure, you're gonna target. You're gonna let it target to the Fibonacci here. Once Fibonacci holds up, you would take it back up. And when you take it back up, you want to exit right here at the break and retest. And now it's up here to retest, right? So that was 3 strategies right there that I took from the playbook. Within one trade, I have 3 strategies in play, all working at once. That's pretty much it for the Fib. Honestly, you guys just need to use it. The more you use the Fibonacci, the more you're gonna get used to using it and recognizing the pivot points. The pivot points, and it's just gonna, your eyes are just gonna be trained more to see it very quickly. I can see pivot points right away. When I see a pivot point, I draw a fib. That's just how I trade. The moment I see a pivot point, guys, I draw a fib. That's it. Like right here, this is where I'll draw a fib right here. Let's just say I'm right here in this point, right? And look, it's pivoting, right? So now it's going down. As it goes down, I want to know how far it can go down, right? So I'm gonna draw like this, down to the low. So now the lowest it can go is this purple line right here. Let's just see if it goes below it now, right? See, once we go here, look, take a look. It's reacting, right? So it's reacting. But now you check it out with the volume. It's reacting, right? So right here, the volume is high on this drop down. Let's see the up candle, the buyer's volume. Buyer's volume is weak, right? Now let's see this next candle. Next candle is also weak. And then the next candle pushes down, strong candle. So this, you can see right here, is not a bounce area. If you look right here, buyers are weak. Look at this candle, and then look at this bar, weak. And then once it breaks this level and it closes below this level, you're now bearish on the shorter time frame. Once it's below that 38%, you gotta flip bias. That's just how it works. Once it's below purple, you flip bias. If you were longs, you are now looking for shorts. If it stays above the 50%, then you would look for longs. The easiest way to learn Fibonacci is to practice it. So that's why whenever you guys are drawing Fibonacci's, just send me your screenshot of your chat while we're in our lives, and I'll look at it. You know, I'll let you guys know if you guys need to make adjustments to the Fibonacci or not. I'll let you guys know if you guys are doing it wrong, and you know, if you guys are identifying the pivots correctly. So in this scenario right here, right? Let's just say in this scenario, you would be drawing it like this. Bottom, you see it pivoting. You think it's the lowest of the low. You would see how far it can go up, right? This is how you're gonna find your RR too, guys. It's a good way to find an RR. Like if you guys want to like reverse it. If you guys are trying to reverse the trend, this is how you know how much it can go up before it can go back down. So I just made a fib right here to here. Let's move it sideways. So now we're looking for longs, right? So from here, we're looking for longs. Let's see how much it can move up. We want it to hit here, the 50%. Does it ever? Market already closed by then. Let's see though. Does it ever? Nope, it never got there. You see? But that's because the market closed. When market closed, volume dies. The volume just died down completely. Let's see your question. Show us your fib on Friday, the ones that hit in reverse, the high time frames. Friday. What do you mean? This is Friday right here. Right here? This one? This fib right here? No, you would draw it from the right here. You would draw it from this one right here. 6 o'clock. The low to the high. Where's the high? Right here. Low to the high. Right? Then there's. Is it right? This isn't right. It's not to draw it. Yeah, over here. The high's over here. So here, you would do the 15-minute. This is why I say the 15-minute, because overnight and the pre-market, you're gonna see a lot of the overnight action. So you just do the 15-minute. 15-minute market opens right here, pretty much right there, right? So you would draw this low to this high. Is that right? No, sorry, the low, the high over here. So you draw this low right here to the high right here, up there, right here. That is basically London session. There you go. There's a reaction. So, if you guys join my pre-market lives, when I right before I do the trading, you guys are gonna see me pretty much draw Fibonacci. That's one of the things I always do. I always have a Fibonacci ready to go when I first, when I'm about to trade the open. And sometimes I'll have two Fibonacci's. I'll have one on for the upside and one for the downside. And then I watch that within that range. That's where I trade. Pretty much, if I hit the bottom, then I'll trade to the top of the other Fibonacci. Because during that time, it's called the opening range for a reason. Right? It's trying to find a direction. And a lot of times, that's how you know where the top and the bottom of the opening range is before it breaks. Once it breaks those levels, once it breaks any of the purple line, which is the 38% for the upside or the downside, it's going to have a direction. That's when you target. So let's just say in this scenario, if it goes above this 38% right here, right, you would look for it like this, and then you would aim for up here. You see, but because it's below, and it reclaimed below the 50%, we aim downwards, and we would target here. This is how in the morning you guys see me like hold for like crazy amount of ticks, guys, because I have the conviction. I just trade from one level to the next. Once it hit the fib, I trade it. I'm very confident with my Fibonacci levels now. The conviction is I have a lot of conviction on my 38%. 50% not so much. 50% I still wait for reaction and I wait for the confirmation. But that 38%, I'm willing to try a start position there a lot of times. How come you leave the fib low at the market open area instead of moving it down to the new pivot low? What do you mean by that? What do you mean by that, Tony? How come you leave the fib low at the market open? Oh, you're talking about like right here? This is where I'm gonna circle. Is this what you're talking about? Why is it not here? Or why is it not down here? Add a 61.82 retest. Where is that 61%? Like right here? Drizzy, is this what you're talking about? Let's talk about. Yeah, I'm gonna answer Drizzy's question right now first, and then we'll come back to you, Tony. See, I see him typing this, but. If it's coming down here and I do a position here, once price drops below that 50%, guys, I will add right here. This is where I would add full position. I'll add right there, full position. If that's what you mean, Drizzy. I'm assuming that's what you're saying. You're saying 61%, but yeah, 61, 50, 30. Add on the 50, 30. So you're 38, 50, 60. Yeah, I don't have 60% up. I don't have 50 or 38. I don't have. So I would normally enter here at start position, and then I would add full position right here as it's dropping down. Right there. So yeah, I do. I have to. So I have a start position, and then I have full add position. Yeah, I was talking about that earlier, right before we got back to this area. But yeah, I did explain that we do add. You know, the 38% is where I start position. This is where I would add the full thing. As price shoots through it, I would add. Yeah, and then we'll take it down here. Sell. Okay. So pretty much right there, that's add, and I mean, sorry, that's start position, and this is add position. And then now Tony. So now you're telling me to, why do I not make this the pivot low, right? Because the reason why is because right here, market didn't open yet. Market opened right here. Let me show you where market opened. Where's market open? 6:30. So market open on this candle. Okay, this is the candle market open. Okay, so you see, this is why I don't add, because this level was not available to me yet. This level didn't come on until 30 minutes after the market opened. Does that make sense, Tony? See, this is how it looks right here. This is market open right here. There is no level. You see, there's no level yet. This is all I have right here at market open, right? But we're doing pre-market, so we don't even have that one candle yet either. All we have is this. Yeah. Yeah, right? You see it? Look at it. It held perfectly. And the reason why I traded that longs too, because look, it has three things. Okay, it has demand, it has the 2-hour confluence level that I have, and it has a trend line going up. There's 3 confluences there. That's why I have the conviction to play up. Yeah. Yeah, I'll do confluence levels next. That'll be the next video. But you guys see, there's 3 confluences here, right? So I have full conviction that this is a good long trade. Look how many times it held. It could not close below either. So back to what Tony's question was. This is what we see right here when we first have the pre-market, right? So we actually see this right here. Take a look. This is what we see. We don't even see. This is market open, guys. Not even market. This is before market opens, right? So this is why I would use this level as a pivot, and then this is the high, because this is currently the lowest. But the thing is, it needs to bounce. Okay, you can't just take, like, you can't just take this candle over here and call it a pivot. This is not a pivot yet, guys. You see, this right here is not a pivot yet. This is just the low. There's no pivot. Price never came back up, right? Look, this is still not a pivot. Price never came back up yet. This is now a pivot. You see, because now there's a green candle. Green candle shows a pivot, and it came up from that low. So we draw that to the London session here within the same day. The high of the session, the low of the session. All right, and then look, when price comes down, we know price is gonna come down, okay? But where is price gonna come down to, right? We know price is probably gonna come down to here because it's close to the demand already. So we're gonna, if we take any shorts, we would take it down there, right? Now, since price did hold up, what we're gonna do is we're gonna now aim for the longs. Now, where do we aim for longs? These are the levels we currently have only for the day. You see? And so we hit it up. And then now price rejected. If it doesn't come back to 38%, it's already reclaiming that 50%. So we're gonna take it down low. See, you never reclaimed the high of the previous high either. These kind of things will happen very fast while we're trading, especially during the market open. So it's gonna take a lot of practice. It's gonna take you to get used to it. It's gonna take you some time to trust these levels also. What's up, George? 38%, 61%. What is it? 61%, 50%. 1.6, yeah, 1.6, 2.6. Yeah, I usually just do 1.6 and 2.6 the same color, just because I know those are TP levels. I do them both yellow. And what is 1? 1, the 0 and 1 should be like a dark gray. 0 and 1 is 100% pretty much. Yeah, I would do that as dark gray, George, and put the opacity very low, the transparency just very dim, so that it doesn't mess up and like clutter up your chart. And then for the 38%, I like the magenta, and then I like 50% blue. I don't use 61%, man. So I've been using Fibonacci for a long time, and those other levels are just gonna clutter up your charts. And you know what, George? You're a holder too. You're a bag holder. You don't want that 61% there. Trust me. What is CBH? Yeah. So you're a bag holder. You like to hold. So you don't want that 61%, guys. Anybody that here's the thing. The more lines you have on your chart, the less conviction you'll have. Okay. More is not better when it comes to trading. Less is more in everything, if you think about it. Less trades equal more profit. Less indicators equals more conviction. Everything is less. It's the opposite of our daily life. Yeah, like I told you, Ninja Trader, the Trading View, Thinkorswim, they're all different, man. I think Tradeovate is a little bit different too. But there's only two ways. The 62% and 38% is where it mixed match, and the way you draw it from top to the bottom. It's just the mechanics of the platform. So it's different. Let's see. His 62% is your 38%. Yeah. Yeah. So like I said, 62% and 38% is interchangeable. You switch that. If you drew the other, then you could do it like Trading View. But the problem with it is that the TP, the golden levels, you get it? The golden levels, they become like on the downside instead of the upside. Well, but what's wrong with mine? Mine makes more sense if it's 50% to 38%, because obviously if I want price to come back to the 50%, and if it passes 50%, it will be 38%, right? That's what makes sense. And the way it draws is also makes sense too. I draw it from the top, but I know the way it draws is a little bit different. Or was it Thinkorswim? I don't know, one of it. But the way I draw on Thinkorswim is different too. Yeah, this is gonna be recorded, George. Well, I don't know. So you guys figure it out on your own platform, okay, guys? I use my own platform. This is how it works for mine. Just use it on your own platform. But these are the levels that I have. Yeah, like I said, it all works the same. It's just some is flipped, some is not. But in theory, it's all the same. Just get it to work, however. But it should make sense. Whenever you drag it, 50%, 38%. 0% is dim, 100% is dim. Just keep it like that, guys. Yeah. I hope people are at least they know the basics of that, so that they can know how to draw it. If anyone wants an article on this, read. Yeah. So pretty much that's it, guys, for the FIB. The only thing I can recommend to you guys is just to practice it. The more you practice it, the more you're gonna get more comfortable with it, and the more you're gonna see where it reacts. When I first started out, I didn't trust the 38% at all. Yeah, it's I actually tried to use it before, and I was drawing it wrong. And you have to learn to trust the FIB, but in order to trust it, you have to draw it correctly. And a good way to know if you're drawing correctly is to match it up with your supply and demand, or to match it up with your support and resistance. You can see it matching up perfectly sometimes, right? Let's just say I draw it right here. So this one matches up with not really anything. This is a small time frame, but you're gonna see it match up sometimes with the 200 SMA, the VWAP. It's gonna line up like right there on the dot with it. That's how you know you have a good level. That's gonna give you another conviction, and that's how you get confident with your level. Let me show you some. That's another video, but here I'll show you a quick little glimpse of it. So right here, right? Let's just say right here, this is a supply right here, right? I drop from the top to the bottom of the body, okay, not the wick. You see how the wick is right here, down here? I bring it. Yeah, so this is your drawing here. You drew your low was good of the open, because open right there, but your high was from the previous day. You want it to be right here where your I drew from opening print. Oh yeah, and also you drew from opening print. So if you drew from opening print, what's gonna happen is you're gonna have that level. You're gonna be really late. You know, you're not gonna be prepared for your entry. If the play, you know, in the morning when it happens, it's gonna be too fast. This was London highs over here. You see where my mouse is? London highs over here. Yeah, and then this right here, I can't see exactly what time it is, but yeah, for sure, Evelyn, you do your thing. So based off of what I was drawing earlier, minutes. So this is where it is right here, right? Pretty much. So because let's just pretend like we're not we're about to trade here, right? The clock is ticking and we're about to open right around here. So this is the candle open right here. So yeah, so pretty much this whole area we would draw from the low pivot right here. So the low pivot right here to that high. You see the highs right there? I circled it. See the clock right here? The clock is right here, right at open, London high. It opened right there. So we would take this right here, Fibonacci from the bottom to the top, to the wick, and then there we go. Let's see how it looks if we were to draw like this, okay? If let's say we got the drop, right? This is now the lowest of the day, right? At the time. We would take this all the way to the top. Yeah, and look, it's even more accurate. You see? It's actually even more accurate, Tony. So this comes to what you were talking about right here. So yeah, but the thing is, you would have to let the candles form already, and the move would already happen, and then you would get 38%. You see? And look, this looks even better. So if in the real world scenario, price would be moving like this, right? And the moment it starts reacting, right here is when you will start. So the moment it pivots here, this is when you start drawing a new fib. I don't have a London clock, no. What do you mean by London clock? What do you mean by what clock is it? The London right here, London time. It's just 12 o'clock for me is the London open. Yeah. So earlier, Tony, you were earlier, Tony, you were asking like, why don't I draw from the 15060, right? Because at the time we don't have that level yet. The level of the price didn't go to there yet. So as price comes, all we had was to work off of these levels right here. So This is what we had, right? But now the moment the moment it starts bouncing here, right, and we decide to take a long, we would just target long. We would target long, and then we would change our fib. We would redraw our fib. We would delete this fib right here. So earlier the fib was like this, right? So earlier the fib was like this, and price is dropping down, right? This is real world right now. Let's just pretend like the market's open. We're aiming downwards. We're aiming downwards. It reacts here, right? The moment it reacts here, all right, we're like, okay, it's reacting. We're gonna take the longs. We're gonna take the longs. But at the time, all we know was to target this area, right? Because also at the time we also have a demand right here. So as it's moving up, now this is now a pivot with this big candle up here. For sure, it's a pivot. We would now change our Fibonacci. We delete this old one, draw a new Fibonacci from that low to the high, and then now this is now the Fibonacci we use, because that's the real pivot once we got that data, right? And then now once we got that data out, we know this is where conviction is going to be held if we see a rejection, which we did. You see, wick. Now we would start a start position for the shorts. Start position, and then the moment it passes the blue line here, 50%, full position, and then we drag it down all the way down for lower lows, right? Because that's what we're aiming for, lower lows. So we would target this level, but we would TP most of it here. Yeah. So, and that's the reason why you saw me take like that trade, that shorts. It actually went to like 400 or 500 ticks. This trade right here was about 400 or 500 ticks. Slim caught this trade too. He got about like 400 or 500 ticks off of it. And that's how we, well, a lot of us did. I think a good amount of people did it. But yeah, so we did catch this trade, and it came out to be, you know, a good amount, a fat one. But that's how I got the conviction for that direction. Because look, we are making a lower low on each. We're not able to reclaim. See, we're not reclaiming this. Then we're not reclaiming this high. See, we just keep making lower lows, right? Lower lows. You know, right there. So if we keep making lower lows, of course, the next move will be lower. Right? That's just naturally where price goes, as you can see. Lower low. Lower, 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 lower. FIB and drop. It was a great play. Yeah, and there was also a gap. I think this was a gap one right here, I believe. Yeah. So all those other things are just more confluences to our trade, you know. Fibonacci is something that's really good to add to conviction, and I get a lot of conviction when my Fibonacci's match up. And here's one tip I can give you guys. Because in the beginning, I wouldn't trust it as much, but I learned to trust it a lot. Is if you feel like entering around 50%, don't. Price almost 90% of the time, I would say, touches 38%, guys. So that's one big advice I can give you guys, based off experience. Is that when you guys start using the Fibonacci's, don't enter at the 50%. Wait for the 38%. And just pay attention to that. You're gonna see, man. It will hit 50%, it will react, it'll do some funny business here. Sometimes it'll go like this, but it comes back up, man. You know? So the best entry is at the 38%. And your stop loss could be right behind it somewhere, right above it, you know, anywhere from here to here. Just gotta always give it room, though. That's the thing. If you put your hard stop right behind it, it could just trigger it. But body of the candle usually closes, and that's why I tell you guys, when you guys enter, is if the candle closes below the purple line, I will enter. And you see, in this case, it closed below. I would enter, starting somewhere right here. So that's what I mean by close below 38%. I always look for that. Now, if it closes above 38%, I'm looking for it to do this. Seven to 8 a.m. Silver bullet. Don't know what that means. And look, there's a 1 to 3 pattern here. Yeah, I know it's ICC. But yeah, so the biggest thing, keep in mind, guys, 38% purple line. Trade that one. Do not trade the blue one. The blue one is wait for more confirmation. Blue, you wait for confirmation. Purple line, good chance. Start position, so the price don't miss you. You know, you don't miss the action. Yeah, that's pretty much it, guys. You know, we will trade it, we will practice it. You guys can just, you know, if you guys draw it and you guys are using it, send me the picture, you know. Just send it to me throughout our session and I'll look it over and I'll let you guys know how to correct it and stuff. Yeah, FIB is very powerful, man, because the thing is, look, it's gonna give you guys levels that you guys a lot of times have problems finding, right? It's gonna give you guys. Let me tell you something about the FIB. These FIB rare, let's say I just draw this FIB, right? Somewhere along the line on the higher time frame, it's gonna match up right here. Literally, the FIB will sit somewhere right here. These are basically supply and demand. There's supply and demand right here, this level. You're gonna see it when you start drawing it. Higher time frame, lower time frame, you're gonna see that your supply and demand that you draw will sit right with it. It just matches up perfectly, and you're gonna get a lot more conviction when it does that. Evil twin, you know, it's a lot easier. Like, trading isn't hard, but we make it hard. You know, the emotions that comes with it is what mixes up the, you know, the conviction, and messes with your thinking. But the price, if you look at it, is exactly the way it is, man. Yeah, we literally make it more hard. That's why we add up like 10 different indicators on. You know, when you first start out trading, people add 10 different indicators, man, and they start using it and they think it's all magic. That's, you know, but honestly, I can trade with the empty chart, guys. Like, literally, I don't need any of this stuff. You know, I can straight up just draw like I can draw like just simple lines of like, you know, like this, and then you know, something like this. I can draw it and I can trade off of this. You know, I don't need anything. I can trade off a blank chart. But yeah, it's just, you know, these things, they help you. The way they help you is that they just do it for you. They do the job for you sometimes, you know. They just draw the line for you. They draw the levels for you. You kind of have an idea, visual idea of where the levels are. You know, they just add more conviction. That's it. But yeah, you know, trading is really easy, guys. It really is. It's all emotional after that. Emotions and handling your psychology that's the hard part. And you know, that's the reason why also, guys, you guys learn these things, and you guys see me doing this right now with the course and everything. You guys gonna come into the market thinking you guys are Superman, okay? Just letting you know. You're just gonna think, oh my god, something just clicked. This is so easy. And you're gonna come in, you're gonna try to do this. It doesn't work like that because it comes down to execution again. Just because you learn all this stuff today doesn't mean you're gonna be able to execute it. Look guys, here's a confluence area. Let me draw a confluence for you guys right now. There, that's confluence. 15135 around there. Take a look, it's bouncing, see? Yeah, it's acting up right here. Look, acting here. Reacting right here. Reacting right here. Reacting right here. Confluence right there. Yeah. Exactly, man. That's the reason why, you know, it doesn't mean anything if you guys can't execute. Most people can't execute, man. Some people are really good at analysis. But they're good analysts, but they can't execute. It's a common problem. Yeah, for sure. Yeah, you know, this is all I got for you guys today. Next time we'll do some, I think Confluence is quick, man. Confluence is like probably like, you know, 20 minutes video. Get you guys all up to speed and then you guys can all rock and roll. We might do that maybe tomorrow. If we have time tomorrow, I'll just, you know, do a last minute Confluence video. Yeah. Alright guys, we get some rest. We trade probably tomorrow. I think we trade Sunday, right? Sunday London session. Yeah, so maybe we'll do a quick Confluence video, and then right after that we'll bring into London. We'll rock and roll.
Alright everybody, we're gonna wrap it up here. Come join us in Traders Reborn Discord. Currently free for a limited time right now. Link below or in my bio.
Sure.
We educate and help members break bad
Get
habits,
you guys on the same
pass the
page,
evaluations
man.
for the
Set you guys up
programs,
for
and
success.
become self-sufficient traders. Hope you all found value in this video, and if you did, go ahead and hit the like
Get
and
it.
subscribe for more content.
All right.
Comment below
Peace
on
out,
what you'd like me
guys.
to talk about more about.
Chat with you guys
Feedback
on
would be
chat.
great. Traders Reborn, let's go.